This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Hey, everybody. Thanks for tuning in. This is Mike Mansfield and Tana Pennington.
Hi.
No longer on location. She is
I'm home.
back in the United States. She's back in the U.S. and in Texas. She left communist California. Oh man, now you just made 3 people mad that watched this.
Yes, you did.
Hey, look, everyone, if you're watching the show, right, we got a lot of podcast listeners, so I get that. But if you watch this on YouTube or Rumble, we went with the black background. It's seasonal. I thought it was like Halloween-y. So
spooky.
We're trying to be a little scary. I got my dark shirt. Oh, my. What are you going to be for Halloween, Tana?
Oh, dear. Nothing. I don't like dressing up. I just like to be me.
I don't like dressing up, but you got children. It's for the children.
I know. And I do. I take them around the neighborhood and they have a great time, but I just kind of,
I don't know. Yeah, we haven't talked about it. I guess we should jump on that grenade here pretty quickly. I'm not sure what we're going to be.
Yeah, well, my husband's coming back in town, so he's in charge of getting them their costumes and working all those details out. I don't want to do it.
All right. So he could be Paul Bunyan.
Yes,
obviously.
I know. The Jolly Green Giant.
Well, what's going on in the world? Let's see. Here I was reading something right now. I'm not even going to pop it up because it's too boring. Just says vaccine mandates lead to worker shortages.
Mm-hmm.
Well, that's fascinating. So it's really interesting right now, right? We're at a point where the economy was literally on fire. Almost too good pre-COVID. You go back to February of 2020. It seems like a different planet, right? They're going to make movies of what it was like in February of 2020, how the world has changed. And you had hundreds of thousands of jobs being created. You had a really low unemployment rate. You had strong labor participation. You had strong wage growth year over year for all categories. Actually, the lowest incomes were getting the highest wage growth. Everything was booming. People were fat and happy. They had money. They were spending it at Walmart and on Amazon and buying a bunch of junk they don't need. It was awesome. And then obviously last year, the market craters, the GDP has the worst 1-quarter drop ever. Then suddenly has the biggest 1-quarter increase ever, because that's kind of what happens, best and worst and all this kind of stuff. And and so it took time. We had shutdowns going on and all these things and government stimulus and blah, 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 blah. And we got to this point where coming into this year, especially as we were getting into the second half of the year, the expectation was that, okay, all of that is behind us. We're getting back on that economic trajectory we're on pre-COVID. And so we're going to have booming job numbers and all of this kind of stuff. And just a week ago, we just had the job numbers out for last month, and they're terrible. Fell asleep, right? We had less than 200,000 jobs payrolls when we were expecting about 500,000, at least from the polled economists. So the problem is, turns out that nobody likes big government except big government and everyone who likes big government. Sorry, that's some kind of joke to myself that I enjoyed, but that's okay. I'll explain it to everyone later. But the problem is, right, is businesses are very, we'll say, tread lighty when it comes to the government. And when big government starts saying, "Yeah, you evil businesses, we're going to tax you more, we're going to raise taxes, we're going to raise regulations, and we're going to do all of this stuff," it makes the businesses tread a little lighter with borrowing money, and hiring people, because everybody's in a little bit of a like, wait a second, what are they doing?
They just don't really know what to expect, so they're hard.
They gotta tread a little lightly. So that's one component of all of this. You have the other big government issue in the economy where they allowed government benefits to ride out a little too long. They've now replaced the unemployment benefits though with child tax credits. Remember, if if you're a family of 4 kids, if you got 4 kids in your household, you could be getting in the neighborhood of like $1,100 a month right now of money you've never seen before in your life. Like that, once again, that makes someone a little less motivated to run out and maybe get that second job, get that job to do something, because all of a sudden the government's kind of supporting you and helping you out and giving you a few extra bucks you needed. So some of that's going on. Then you get to the vaccine mandate thing. This is kind of an utter mess at this point. A lot of people are pushing back on it. I mean, I was just reading here's something. I'm not going to pop it up here. Seattle police. Now the department could fire up to 403 officers, 40% of the workforce, because they haven't gotten vaccinated and the deadline's October 18th.
Wow. Well, and I even experienced it this weekend, although I didn't fly on this particular airline, but apparently
Southwest?
I didn't fly on that, but I noticed that there was a lot of cancellations and people were frustrated.
Flights. It was like something like 30% of their routes or whatever they call it.
Right.
And
it's
so
because
it's funny,
they had a walkout.
Yeah. So there's mixed stories, right? At first it was weather. I'm like, what weather? I looked outside. It's sunny. And then they said, well, it was the control tower,
right?
Or the what is it? Air control. They couldn't figure it out. And now all of a sudden this morning, the articles are coming out that, oh, wait a second, it might have been something to do with labor and upset people about vaccinations.
Yes.
Let's see, the largest healthcare provider in New York just fired 1,400 workers last week over failure to comply with the mandate.
Wow.
Now, just let's put that in perspective. I have a ton of clients that are nurses that are spread between CMH and St. John's and Cottage and Santa Barbara and stuff. And so I've been having this conversation a lot with people. And the conversation, the way they're presenting to me is, last year I was told I'm a hero. It's like being on the front lines of a war is the way it was described. I'm there in the hospitals. I'm making it happen. And now this year, I'm the dog out in the doghouse. And I'm going to get fired if I don't do what they say. And it's really got a lot of, at least the people that I know from the nurse standpoint, a little peeved.
Yeah, absolutely.
So anyways, that's fun. So those are just some of the current event messes. Hopefully they kind of normalize, work themselves out, or I don't know, bada bing, bada boom. That's all I have to say about that.
Well, did you get that article I sent you?
It's tragic. Yeah, I did.
It is tragic. No, I totally agree. So speaking of
something. That was something, though. That was something. Economics impact you, people. That's why we talk about this stuff.
Right. And the pandemic has definitely created a wake-up call for people trying to save for retirement. Everyone's kind of a little more concerned. They're worried that maybe their original plan for saving for retirement is not going to make it. They mentioned it would almost be, take a miracle to be able to be comfortable in retirement. So, that's unfortunate. That, kind of makes me a little sad. I would hope that people would be a little more optimistic and feel like, the world's not coming to an end, but we just need to really plan ahead.
I heard it was coming to an end.
No, it's not.
That's
not
the
yet.
word on the street.
We got to stay positive. We really do. Keep your chin up.
I am positive. Look, I think like all the stuff I discussed, hopefully conceptually, those are just little speed bumps. The reality is we're in a secular bull market. The reality is people are flush with cash, and the stock market is rather shallow. If people have money and they spend money,
that's all that cares about.
Grind the market up higher quite a bit.
Yeah.
So, there's a lot of social issues. There's a lot of things going on here. In this thing that you sent me, Tana, I thought the first thing I highlighted, I don't know why it highlights in gray. I need like a darker color. In a recent report, 36% of Americans say they will never have enough money to be able to retire. That includes me.
No.
What everyone always tells me, like, dude, you got 4 weddings.
That's true. Seriously. That's a lot.
And then they're like 4 colleges.
Yeah. But I was gonna say.
My attitude is college will be free by then. What are you talking about? I'm not worried about that. It's all the other suckers that had to pay for college. Even more, roughly 41% said their ability to be financially secure in retirement would take a miracle.
Yeah,
All right, so I'm gonna tell a story.
Okay.
Nah, I don't know. Well, it's not much of a story. So anyways, I was up early this morning. So I was up at 4 and I went to the gas station, put gas in my car. And it's always fun going to the gas station between 4 and 5 a.m. because it's like watching the movie The Walking Dead around here. And so, or a TV show rather. And like it's like a little like, whoo, you know, it's an interesting crowd. And you know, sometimes it's a little nerve-wracking. You got, you know, interesting people approaching you while you're trying to pump gas and all of that. And anyway, so I go inside to get something to drink. And yeah, I start my drinking at 4 a.m. as soon as they start selling it again. No,
what is it, like a rock star?
No, it's more of a joke. I was trying to make some kind of booze joke. I don't even drink.
No, I know.
I didn't sell it. What I was drinking, I was just getting some milk. No, I
was trying to point that out.
Anyways, this young guy was standing in line in front of me. Young guy. Yeah, I don't know, probably early 20s kind of a thing. And I had to wait there for like a solid 5 minutes. And what he was doing with the gentleman checking him out was he was like very sporadically and all over the place buying scratchers. But I mean, he must have bought 20 or 30 of them. He had to keep swiping his debit card to buy more. And he was all erratic over the place. And, you know, honestly, when I was looking at it, it made me feel bad because, you know, maybe the guy's got tons of money and can afford a bunch of scratchers. I'm suspicious that's not the case. And he was just, you know, front loading on what this article is saying on, hey, maybe a miracle will happen today. And I'll land a boatload of money in my pocket and that'll make things better. And so it's really sad to know that a lot of people feel that way. I think that really does play to what you and I do, Tana, retirement income planning, of really trying to sit down with what people do have, because oftentimes people's situations aren't quite as bad as they think.
Exactly.
They feel that way because they feel like, oh, my friend has more money or I don't have enough saved. That's totally true. But when you start getting into the guts of a lot of people's plans, I mean, something even as simple as Social Security, you know, not understanding the rules or understanding how much you have coming in or the timing of that. I mean, there are a lot of people in this country, a husband and wife kind of a thing, couples where, you know, they generate $40, $50, $60, $70,000 a year in retirement of Social Security. And by itself, it's all completely tax-free. And so when you have that kind of a baseline income right there, well, you know, could you have more? Absolutely. Could things be better? Absolutely. But what a great place to be.
Yeah.
You know, if you could have 60 grand and go be broke on the promenade, well, you know, things could certainly be worse. You then overlay things like, you know, do you have a home? Maybe you got a little bit of equity, you know, without playing to it takes a miracle, understanding things like inheritances, not something we focus on, not a priority, but these are all byproduct things. So sometimes there's a little more there than what a lot of people perceive. And so, you know, everyone is always very busy just to solely look at their 401k and say, crud, should have saved more.
Right.
All right. What else does this article say? Let's see. COVID crisis, blah, 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 blah.
Well, I thought it was interesting. If you scroll down, it talks about how the old rule, you know, the rule of 100, where typically somebody are in their like 60s would probably be about I don't know, 40% in stocks.
Well, wait. Look at this though, real quick. I mean, this is interesting. People still want to retire as soon as possible. The average age of when people would like to stop working is 62. So that's funny to me from an emotional standpoint, right? Because remember, there's numbers and there's emotions. That's a lot of what exists in our conversations with people. And so emotionally, that's what people want. I want to retire as soon as possible.
Yeah,
me too. Susie Orman, though, a couple of years ago, she came out and had one of her TV specials, and she said the new normal for retirement age should be over the age of 70. So it's amazing how from what this financial professional thinks to what emotionally people think, there's at the moment, there's a 10-year disconnect there.
Right.
Anyways, rule of 100. Let's see where it says that in here. Let me scan. The older rules may no longer apply. That's scary. I don't know. 4% rule. We've talked about all that stuff. Where's the rule of 100? It's in here somewhere, huh?
Well, it's talking about how maybe having an approach where you're actually 80% in stocks.
Yeah, right here. So Stephen Check. That sounds like a strong name. Costa Mesa, which ranked number 4 in CNBC Financial Advisor, recommends sticking with an 80% allocation to stock.
Right, which is higher than
a 60%. Well, and you know what? He's probably not wrong. And the reason that he's not wrong is when you get into old rules were based on old facts. For example, when you looked at a 60-40 stock to bond allocation, or let's talk about that 40% in bonds. What's happening with bonds? For the last 40 years, interest rates have fallen, which means bonds have provided really good rates of return with low risk.
Right.
Above and beyond that, the interest dividend yield off of the bonds was high. Maybe you're not in bonds. Maybe you're in cash. Maybe you're in a CD. All of those things historically had decent rates of return. I mean, hell, I can remember a client not that long ago that came to me that had bought a 10-year CD from some online bank, and it was just maturing, and she was getting 5.5%. She said, okay, what can I go invest this in? And we both just had a good laugh.
Yeah.
And that's it, so in the old days, it made a whole lot more sense to have that conservative exposure,
right?
Because you could get a decent rate of return. You could be making 3, 4, 5, 6, 7% on your conservative stuff.
Right.
The problem is now all of a sudden inflation is 3, 4, 5, 6, 7%.
Yeah.
And so you're just getting crushed on your fixed income portfolio.
Yeah.
And so this is a conundrum for a lot of people mentally. And the conundrum is, what is good if you're scared of inflation? What is good if you're scared of low interest yielding investments? Ironically, the stock market's good because big hedge funds, institutional funds, they realize something. They realize that, okay, if our clients are going to lose money based on inflation, can we keep it in cash? Can we put them in CDs? Not right now. Can we put them in bonds? No, nothing works except for the stock market with trying to create some kind of positive delta return on your investments.
Right.
And so this guy is probably right. His specific 80% allocation, probably has its own rationale of what he's up to. But the point being is following those old rules can be very problematic right now because it was the old rules that had old projected rates of return that just don't exist. The joke of a bond right now, I feel like, is in the old days, hey, if I could earn 3 to 5% on my bonds, I'm doing really good. Now the joke is if I don't lose more than 3 to 5% on my bonds, I'm doing really good. Here, let me pull it up. Hang on.
It's flipped.
I'm gonna let's go to Yahoo. Oh, my lights turned off. What happened? Hang on. Oh, they're back. I'm back. Was that is that how you guys tell me stop talking?
That's awesome.
Yahoo Finance. Let's see if I can do this real quick. This is gonna be fun. Look, I'm on the fly. This is unplanned, everybody. Oh my gosh, this is so impressive. Okay. I don't know if anybody can see this. Maybe you can. I can see it. How's that? So here's a chart on Yahoo Finance, and I just pulled it up really quick to kind of make a quick point. Is the top squiggly line that's going straight up? If anybody could see it, squint your eyes, zoom into the camera. The little green thing at the end of that squiggly line is where the S&P 500 is year to date. Can you see it, Tana?
I can see it.
What's the stock market up year to date?
17.1%.
Woohoo! Now, oh great. Figures there's some kind of weird thing over the bottom one. The little tiny blue line hanging out at the bottom of the screen, though, is bonds this year.
Yeah.
And I know it's kind of hard to see because there's some kind of volume thing here.
But they're down like 3.5%.
Mark, I was trying to. Nothing's working. Right. I tried to do something. Anyways, but the point is bonds are down this year. There's literally a 20% spread between where the stock market's at and where bonds are at this year. And bonds are going down. They're down 3% when the stock market's up. So think about your traditional 60-40 portfolio.
Right.
You got 40% of your portfolio that's down 3% this year. Even though you're like, that can't be true, Mike, because everything's up except bonds. Right. And that's because of inflation. That's because of the fear of the Feds raising rates coming down the pike. Bonds are going to bleed probably for the next 3 to 5 years till the dumb knucklehead Feds get their act in order. I actually told someone the other day I must be too stupid to be on the Federal Reserve because I would have been raising rates by now. So there's that. They know something I don't know.
All right.
Put it that way. So anyways, let's go. We're going to get away from that. This is that. Yeah, boy,
You're on fire.
There must have been a lot of caffeine in that chocolate milk I got at the gas station at 4 a.m.
Oh, it was chocolate milk.
And
donuts.
Yeah, a sleeve of those. Dude,
right.
Like, there's nothing better than those like garbage crumb donuts.
Oh, totally.
Like
terrible.
Like, who invented those? I mean, like when you compare them to the chocolate and the powder, white powder, you know, there's just hands down winner.
That reminds me of like middle school. Oh,
I know,
dear.
but so good. And you know, my wife moderates my carb intake, so
right.
You
got to sneak it in.
I should
hiding in your car.
Anyways, yeah. So no, you know, he brings up a really good point. And that, you know, and that point being that we're reconsidering allocation, reconsidering alternative asset classes. I mean, one of the things that Tana and I do quite a bit, hell, your dad did it this year, is we do what's called bond proxying with fixed index annuities. Remember what the goal of a bond is, people, is to try to make a 3 to 5% return, period. Safe, boring, conservative. Well, the problem is now they're bleeding. I just showed you the chart where bonds are losing money this year, and that ain't going bye-bye. And so the benefit of like a fixed index annuity, I think your dad just bought a 5-year fixed index annuity.
Did.
And basically no fees, no costs, principal protection. So if bonds decide to be down 3% this year, and more importantly, if the stock market goes down, dad doesn't lose any money. To be fair, my mom owns a couple of these investments too. So we got both of our parents in them. Well, and but at the same token, if the stock market goes up as it is this year, you know, he'll earn up to a cap and probably end up making 4 or 5%. And so it's cool because that's a safe, boring, conservative asset class that, guess what, replaces the interest rate risk in your bonds. So it works fantastically as a bond proxy. So there are some things to do. Even things like buffered indexes, which I think we've talked about before. Maybe we should do a better show on those sometime.
Yeah,
so there's a lot of
detail.
alternatives on how to invest money without having the drama of the stock market, without having the drama of the bond market. And to be fair, if I was a betting man, I would be 10 times more scared of your bonds right now than the stock market.
Yeah, good point.
Boom. What else do you want to talk about, Tana?
Well,
kind of done.
Medicare open enrollment.
Oh,
starts October 15th.
Hallelujah.
I know.
Yeah. So we need to have a, maybe we should have talked about this before we did this on a recorded show. So my understanding is you can always, you know, the first time always get in, but if your health massively declines, there are scenarios where if you wanted to switch to a better plan, they could ask you medical questions.
That is true. So you got to be careful. The best time to enroll in a Medicare supplement plan is during your initial enrollment period. That's going to occur when you are turning 65, or if you have chosen to delay your Medicare because you're on an employer or union coverage. So whenever you decide to retire and you're going to officially switch over to Medicare, that is the best time to elect a Medicare supplement.
I feel like I asked that question in a different way last week.
Oh, I'm sorry.
You said, yeah, you can switch.
Well, I probably, yeah. Well, sometimes
and then I had 30 people call me all excited saying, oh, I heard I can do whatever I want. Tana said I could do whatever I want.
No, I'm sorry if I made that a little confusing.
Yeah. Anyways.
Sorry. There's just so many rules and I could have messed that one up.
On that sad note, I think we should wrap the show up. And next week we'll have a new host. I haven't decided who it'll be. It won't be Tana anymore. Giving misinformation.
I'm being replaced.
Yeah. It doesn't take much with me. Like, you know, one strike. That's it.
Just no forgiveness whatsoever.
No. Why? You know? Yeah. Anyways,
I'm human.
We appreciate all of our listeners. We appreciate all the feedback we get. Please don't hesitate to call us, to email us. You can call us at 805-500-7035. You can visit our main website, thelindgroup.com. Lind is Lynd. We do, you know, obviously retirement income planning. So please contact us for a complimentary consultation. And if you're an existing client and you're freaking out about something, give me a call. We'll get it all straightened out for you. So anyways, everybody, we appreciate you taking the time. Certainly like the video, give us some star ratings if you don't mind, share it with a friend. All of that stuff is fantastic. Otherwise, everyone have a great week and
Yes.